Why should anyone care about understanding depreciation methods in accounting? Well, whether you're an accounting whiz or a newcomer, knowing the intricacies of depreciation methods can make a world of difference, both in your studies and in the real world. Today we're going to delve into the fascinating world of accounting depreciation methods. First up, we have the straight line method. Picture a line, simple and unbroken, stretching out into the horizon. That's the straight line method for you. It's the simplest and most commonly used method of depreciation. Under this method, the asset's cost minus its salvage value is spread evenly over its useful life. The result? Each accounting period receives an equal portion of the cost. The beauty of this method is in its simplicity, making it a preferred choice for those who value ease of calculation and predictability. Next, we have the diminishing balance method. This method is like a roller coaster ride. It starts high and gradually declines. In this method, a fixed percentage of the asset's book value is depreciated each year. The depreciation expense is high in the early years and decreases over time. This method is perfect for assets that lose their value quickly, like vehicles or technology equipment. Moving on to the sum of the year's digits method. If you're a fan of formulas, you'll love this one. This method accelerates depreciation, like the diminishing balance method, but with a twist. It uses a fraction, the numerator of which is the remaining useful life of the asset, and the denominator is the sum of the year's digits. The depreciation expense decreases over time, but the calculation is a bit more complex. Finally, we have the output method. This method is a bit like a chameleon, changing based on the asset's usage. The depreciation expense is calculated based on the asset's output or the number of hours it's used. This method is perfect for assets whose wear and tear depend on how much they're used, not just how old they are. Output. To recap, the straight line method is like a peaceful walk along a level path, consistent and predictable. The diminishing balance method is like a roller coaster ride, starting high and gradually declining. The sum of the year's digits method is like a complex dance, accelerating depreciation with a unique formula. And the output method is the chameleon, changing based on the asset's usage. Each of these methods has its strengths and weaknesses, and the choice of method can significantly impact the financial statements and tax liabilities of a business. So understanding these methods is not just an academic exercise, but a practical skill that can make a real difference in the world of business. Whether you're studying for an exam or running a business, understanding these depreciation methods can give you an edge. So next time you see a depreciation schedule, you'll know exactly what's going on.